Welcome to the Everything Financial Radio Show. You're listening to the Legacy Radio Network. I am your host, Dennis Tubbergen. Glad you joined me today. We have a terrific show lined up for you today. Dr. Marc Faber will be joining us. Dr. Marc Faber is the publisher of a report called the Gloom, Boom, and Doom Report. Also the author of a must-read book, in my view, Tomorrow's Gold, Asia's Age of Discovery. Dr. Faber was born in Switzerland and now resides in Hong Kong. He is in Hong Kong as we interview him, so we'll be catching up with him momentarily. You'll want to stay tuned for that interview. Also, Scranton, Pennsylvania city employees had a shock. They were earning their salaries, and because the city doesn't have any money, the mayor there cut everyone's salary, including his own, to minimum wage. They're fighting back, but do they have a case? We'll talk about that. Also, CNBC reported this past week that the economy is slowing. Well, that's probably not a surprise to anyone listening. The article stated that the global economy is weak and getting weaker, due in part to the same policies that helped bring the world back from the brink just a few years ago. Well, I'll give you my take. The policies that helped bring the world back from the brink did not bring the world back from the brink. It's simply going to exacerbate the problem. I'll explain. Stay tuned for that. And also, in Maryland, as a result of a millionaire tax, according to an anti-tax group there, 31,000 people left the state from 2007 through 2010. That's 4 years. 31,000 people left. A lot of them went to Florida, which had no income tax. So is this an argument that taxing the wealthy doesn't work? Well, we'll talk about that as well. Couple new things to talk about this week. If you go to investingapproach.com, we'll be glad to send you our 2012 guide, Surviving a Market Crash. You'll get this mailed to you. If you go to the website, just give us your name, give us your address, let us know where to send it, and we'll send you the complete 2012 guide. You'll get a binder, a CD. You can study this in your own home and get a second opinion as to where we think the economy is going and some strategies that you might want to consider. That is investingapproach.com. Also, we have a couple more discovery groups coming up. Tuesday, July 17th at the Highlands Golf Club. You can go to personallegacyseminars.com. That is personallegacyseminars.com to register or to get more information. Please, if you have attended a discovery group in the last 3 months, please let someone else attend. We have just a few seats left. So, again, that's personallegacyseminars.com to get more information or to register. And the website, again, to get the 2012 guide, Surviving a Market Crash, is very simply investingapproach.com. That's investingapproach.com. Financial Radio Show, Dr. Marc Faber. Dr. Faber is the publisher of the Gloom, Boom, and Doom Report. He's also the author of Tomorrow's Gold, Asia's Age of Discovery, and he holds a Ph.D. in economics. He was born in Switzerland but now resides in Hong Kong. He writes regular columns for a large number of Asian and Western magazines and newspapers. You may also have seen his monthly column in Forbes Global. Because of his expertise about Asia and the fund management industry, Marc Faber is a director of a variety of different funds and industrial companies. Dr. Faber, welcome back to the show, and thanks for being with us today.
It's my pleasure. Thank you.
Dr. Faber, you were recently quoted in a Business Insider article on the topic of Europe, and I love the quote. You said if you put 1 or 100 sick banks in a union, it doesn't change the fact that they're sick. In my view, the markets are rallying because they were grossly oversold, and when the markets are grossly oversold, especially the markets of Portugal, Spain, Italy, and France, and any news that is not disastrous propels stocks higher. Now, since you made that statement last week, European stocks have declined some, but what's your ultimate prediction as to how Europe ultimately plays out?
I look at Europe from an investment point of view. And as an investor, I don't think it really matters whether the euro falls apart or not. If it doesn't fall apart, the economy in Europe will not grow. And if it falls apart, it will grow, but from a lower level. So it doesn't really matter. The fact is simply that 2 years ago there was Euro optimism, and the book was written in 2010, Invest in Europe Now. And now there is Euro pessimism that is widespread, and the markets of Portugal, Italy, Spain, Greece, France are near the 2009 lows or below these lows. If the S&P were at the equivalent level, it would be at 666. So all I'm saying is in Europe there are now some stocks that are very inexpensive. And people always say, oh, I wish I could buy stocks when they're cheap. Well, here is now an area of the world, Europe, where stocks are cheap.
Dr. Faber, it was recently reported by the Associated Press that France sold bonds at negative interest rates, 5-year Swiss bonds, I think now at about zero. That means that investors purchasing French bonds would achieve better returns by simply putting the money under the proverbial mattress. Is this a symptom of irrationality, or is there a legitimate reason for this? What's your take?
Well, that's a very good question, because I asked once some investors, why do people actually buy bonds at negative real interest rates, and in some cases even negative nominal rates? And they said to me, look, if I buy a bond at, say, a 10-year treasury at 1.5% yield, I know I'm not making any money because the cost of living increases in the U.S. are more than, say, 5% per annum. So in real terms, I'm losing money. But at least I know how much I'm losing. Whereas if I give it to a fund manager, he may lose 30%. So I'd rather lose 2-3% than 30%.
So give me your take on the euro as a currency. Does it survive, and if so, how? In its current form, or does it take some other form?
Well, you have to ask the politicians about this, because that's a political decision. Basically, I'm leaning towards the view that either countries like Portugal, Spain, Italy, Greece will eventually leave, or that Germany will leave. And that's what I would do if I were Germany. I would go out of the Eurozone.
Now, which is the better of two potentially bad choices, Dr. Faber, as far as currencies are concerned? The U.S. dollar or the euro? Which is the cleanest, dirtiest shirt, to use a Bill Gross term?
Well, for now, the U.S. dollar is strong. And I think compared to the euro, it is, for now at least, the better currency. And I think it will remain so for some time. And we have to realize that in Asia, growth has slowed down very considerably, as well as in Latin America and in other emerging economies of the world. And so there is a tightening of global liquidity, which usually is favorable for the U.S. dollar, but unfavorable for asset markets, including, say, industrial commodities, and including equities in emerging markets, and also in the U.S., I would imagine.
Dr. Faber, I want to follow up on something you said about China. You said growth in Europe or growth in Asia is actually slowing, and it appears that China may be heading for a bit of an economic hard landing. How does China play out?
Well, I think that we have to look at China from a very long-term perspective and from a shorter-term cyclical perspective. From a very long-term perspective, it's easy to say, oh, China will continue to grow and so forth and so on. There will be bumps along the road, like if you look at America, 1800 to today, there were in the 19th century already 19 financial crises and recessions and the Civil War and so forth and so on. Then there was World War I, the Depression, World War II. and China will have speed bumps. There's no question about it. I mean, there's only a dreamer that thinks that China will only grow and never, ever experience a recession. So that people have to understand. And I happen to think that we had excessive credit growth in China, and that we had growth that was driven by fiscal deficits and money printing over the last 2-3 years, and that this led to a terrific misallocation of resources, and now there is a meaningful slowdown. Believe me, McDonald's reports Asian sales to be down year on year. The region is not doing well.
Dr. Faber, we have just 30 seconds or so left in this segment. If someone wants to learn more about your work, where would you direct them?
Well, he can Google my name, Marc Faber, or he can go on my website, www.gloomboomdoom.com.
Terrific. We will continue our conversation with Dr. Marc Faber when Everything Financial Radio on the Legacy Radio Network returns after these words.